Hello and welcome to Dialogue. I'm Yang Rui in Beijing. The health of China's economy has remained high on the watch lists of global investors. Data released today shows China's economy expanded 6.7% in the first quarter from a year earlier. But there were signs of improvement with a rise in industrial output and retail sales, continued growth in fixed asset investment, and a steady increase in inflation. What are the rationale and implications behind the economic figures? What lies ahead for China's structural economic reforms? Today, I'm joined in the studio by Mr. Robert Gap, Director of the Economist Corporate Network, and Professor Huo Deming from Peking University. But before we get started, let's look at this.
China's gross domestic product, or GDP, grew 6.7% in the first quarter from last year. That was in line with expectations and easing slightly from 6.8% in the fourth quarter of 2015. While the number marks the weakest pace of expansion since 2009, other activity data shows that China's economy may be finding traction.
3月份经济主要指标出现这个积极变化。
March activity data are changing in a positive way, so I think that China's economy is showing signs of bottoming out and starting to stabilize. But we cannot be too optimistic. There's still a lot of uncertainties in the global economy. China is going through structural reforms and the real economy is facing a lot of difficulties. So there's still a lot of downward pressure.
Looking forward, Sheng says that China's economic growth may go through some fluctuations in the short term, but that in the long run, it will maintain a mid to high growth rate.
怎么样走？基本面的因素最重要。
Fundamentals are the most important to the economy. We think China's economy has the potential to maintain the growth rate for a long time. China's urbanization is not finished yet. There's still a lot of room for development. There's also a big difference in wealth between the Western, Central and Eastern China. If we develop the Central and Western China to the level of Eastern China, there's huge investment and consumer potential.
The latest data is certainly showing that China's economy is stabilizing, but some are questioning whether it's due to the frequent monetary and fiscal policy easing. The question now is, how can China maintain its growth rate while carrying out reform agenda to reduce overcapacity and achieve long-term economic sustainability? Michelle Vandenberg, CCTV, Beijing.
Gentlemen, it seems the data released by the State Statistics Bureau beat all the market expectations. Are you surprised?
Well, not really beating all the market expectations. 6.7 is within market expectations.
No, that's the GDP figure. I mean, other than the GDP figure, all of the other things, such as industrial output and retail sales, are both beaten market expectations.
Slightly. That's a good sign, but there are other questions we should ask. And I'm looking at a statistic, but in a cautious way, not conservative, but not over-optimistic.
Yeah.
Cautiously optimistic, that's what he said. What do you think?
I think it's good phrasing. In that, look, it's encouraging that China is not rapidly dropping in terms of its GDP growth. And as you indicated, there are some sectors of the economy that are actually showing some growth. That, growth, generally speaking, is good. The bigger issue is how is China readjusting its economy? And that will imply slower growth than before. And I think observers as well as people participating in the economy need to get used to that, because that's necessary for China to transform.
One major part of economics, I'm afraid, is not to turn to stimulus package. However, IMF, for example, calls on all central banks to further stimulate their economy. And in fact, IMF has lowered expectations for almost all the major economies. That's, of course, a major condition for the Chinese economic stabilization. What do you think of the impact of external conditions upon the sustainable growth of the Chinese economy?
Well, for Chinese economy, the external side, I think, is rather stable, put it this way, because the export-import data just released a couple of days ago. And of course, for such a large country, I don't think we should put too much emphasis on the external trade or others, except the capital things. Now, what I'm focusing on is that what about for the next 4 to 5 years, 16 now, and 17, 18, 19, 20, and 6.5, whether that's a bottom line as asserted by the officials or as EIU
Thank you.
forecasted. They were telling that like 4.3% by the year
2020.
that's a drastic difference.
It is.
And that is a certain different way of looking at Chinese economy and for the next 5 years, which is an imminent future, and we have to face it. We have to discuss it.
I agree.
Other than the encouraging statistics about industrial output, retail sales, we also have positive figures about the PMI. So do you think the Chinese economy starts to show signs of stabilization and bottoming out?
It can. When you mean PMI, Purchasing Managers Index, that's often used as a gauge of the Chinese economy. However, there's different types of PMI. There's manufacturing, there's services, and also you have to look at when an economy like China's rebalances more towards consumer-driven growth, those sorts of measures become less directly relevant. Put it this way, I think that there is some sign of stability in the Chinese economy. Earlier, we went into 2016, there was another rapid drop in the stock market. There seemed to be some mishandling there. There were other concerns about a rapid drop off in growth, and that's been stabilized. So in that sense, yes, it's positive, but that's very near term. I think exactly as Professor Huo was talking about, we need to really start looking at how is China going to get through the next 5 years. Not only the government thinking about it, but indeed business leaders as well.
When we look at the issue of sustainability, what do you think of the importance of continuously reducing interest rates? The Central Bank of China has reduced interest rates for 6 times since November of 2014.
Reducing interest rate or lowering the reserve requirement, which is often translated into loose monetary policy, I'm for that, but the key issue is that whether that kind of abundant liquidity, you want to call it, can be transmitted to the real economy, small, medium enterprises, and so on and so forth. And at this moment, I simply don't see that.
What do you think of, for example, we were talking about the monetary easing and fiscal easing, or in other way, we call them the proactive monetary policy or the similarly proactive fiscal policy to help stimulate the economy.
Proactive sounds nicer, but it's not necessarily better. Well, indeed, I mean, I am a bit more concerned about what that liquidity means. And exactly to the point that Doming just made, you have an issue in that all this money going out, which is stimulative and maybe in line with IMF recommendations, it's not really getting to the entrepreneurs. It's not getting to the small and medium-sized enterprises. It tends to stay within the state-owned sector, state-owned banks financing state-owned businesses. And you do want it to get into the real economy. I don't think it's the fiscal and monetary, whether you call it proactive or easing, it's not that approach. You need to have more structural reform.
As the Chinese government vows to steer the economy away from manufacturing to one dependent on consumption and services, what do you think of the current challenges, such as weak exports, sluggish reduction of the overcapacity, a lackluster real estate market, as well as a high level of local debt?
Wow, that's a lot. Long list of
to comment on.
Tons of problems.
Talk about all of them.
Let's talk about the excess capacity, the overproduction side. I think that's the result of the last 4 to 5 years of overinvestment. So we have to face that. And there are difficulty in adjusting to the new level, but we just have to do it. Now, what about the related issue that is transforming the manufacturing to the surface, which is quite two different questions. Now, from my perspective, Chinese service sector has been always too low. Maybe there's some hidden statistic that we didn't find out, but in comparison with, say, India, Chinese service industry is way, way too low. Yeah. So for a healthy economy like China, we have to put more emphasis on how to, well, make that number better. But I'm not talking about adjusting the numbers, but you have to really think about the structural ways of trying to boost the service economy and in relation to private consumption. Because again, I want to say the private consumption is only like 37% of GDP, while investment is still like 46-47% of GDP. And we all know that kind of investment number is too high, and the service or the consumption, you want to call it, is way too low.
Well, time and again, Premier Li Keqiang vowed to undermine the influence of interest groups or lobby groups, encouraging the market forces to play a decisive role in reallocating resources. Having said that, do you think this determination or political will of Premier Li Keqiang and indeed President Xi Jinping should be related to further stimulating the growth of the service industry?
Well, it could be. I mean, that's one way to deal with it, right? Because you typically have the vested interest in manufacturing, the traditional sectors of the economy, and moving things more to services, where we see a lot of the entrepreneurial development, everything from online to entertainment, these cultural sectors of the economy. That could be one way to deal with it, certainly. But by the way, I should just say vested interests are hard to deal with in any economy. The U.S., Europe, it's a problem everywhere.
In your opinion, gentlemen, do you think Premier Li deserves credit for reducing bureaucratic red tapes, encouraging incubation, massive entrepreneurship, and the spirit of innovation as yet another major growth point to sustain the employment rate? That's a major issue, by the way, for all politicians, whatever political institutions.
What Li Keqiang is facing is what we call the bureaucratic system in China, which is a long historical precedent. So the way I'm looking at the vested interest that you were mentioning is that, well, in Western world, vested interest is referring to different private maybe groups. But in China, really, the vested interest referring to quite wide spectrum of people or institutions. For instance, local government.
Right.
They are vested interest. They have a certain, they have a lot of different perspective.
Allegations hold it that local governments are actually the major obstacles to reducing the inventory and overcapacity of the real estate market. Do you agree? I mean, this is, of course, a major factor that may have contributed to the local debt.
Well, undeniably. And it's an interesting point that your question raises, as does Professor Huo's statement, in that it is true, vested interests are everywhere, but they're a little bit different here. And they're entrenched in a different way in China than you find elsewhere. However, at the same time, I'm a bit surprised when I see the issues going on at the local level. You have an extremely powerful central government. And I am sometimes wondering, and maybe either of you or others could explain it to me, but why isn't more pressure applied from the central authority to make the local governments comply? It seems to be more of a kind of a trading mechanism where, you know, you do your thing, I'm allowed to do my thing, and we don't really enforce issues. This is where I think Premier Li Keqiang has indeed talked about the need to push through projects, and he's getting reluctance because people are afraid of being accused of wrongdoing or getting caught up in the anti-corruption campaign. So anyway, my point is a little more central government push here, it seems, could be applied, especially in a system like this one.
And what do we think of CPI in the first quarter of this year, which rose 2.1% year on year? The figure was driven largely by an increase in food prices, with vegetable and pork prices jumping the most.
Well, 2.1% or anything over 2% would be extremely exciting news for Japan.
Well, yeah, or it's a target rate for most economies, in fact.
But for China, I think we should look at the number. Firstly, I see a number. Oh, okay, it's a pleasant number. But you look at the background. Well, see the food and all that. Of course, in China, it's always the food driving forces for the CPI to go up and sometimes going down. So we have to look behind why the CPI food is such an important driving factors. Instead of explaining things, blaming on the food supply side or even demand side, we really have to look at the single incident and trying to resolve it. Because in the United States and others, it was not the case at all.
Thank you very much. You are watching Dialogue with Mr. Huo Deming and Mr. Robert Cab. We're discussing quarter of the first, economic data for the first quarter in the Chinese economy. We'll be back in a few minutes. Stay with us. Welcome back with a low figure of CPI growth, 2.1% year on year. Do you think we're going to instead have the issue of deflation? That will be the top macroeconomic concern, Robert.
Well, deflation, disinflation, and the right target for inflation. So to pick up on what we were just talking about there, 2% is actually a good rate. So it's nice to have that. And indeed, Japan would love to have 2%. You get disinflation when you're at like 0 and below, which is in the case of Japan. So China's a long way from that. And it's not as worrying here as it is in some other major economies, where you see disinflation, meaning below 2%, leading to then possibly deflation. So the simple answer with a long background to it is no, I don't think that's worrying now. I do not see disinflation or certainly deflation plaguing China.
As I mentioned earlier, the central bank has cut interest rates 6 times since November 2014. At the same time, M2 supply is a lot, to say nothing of the consumer price index driven by a surge in the food prices, particularly vegetable and pork rise. Why don't we have CPI dangers?
Well, for China, if you look at the CPI for last, say, 15 years after 2000, our average CPI is really, real low. I say we're like 3%. Okay, at the highest around 6 or 7%, which is unlike in the 90s, or goes up to 20%.
Yeah, very high.
So, relative speaking, I think China, we really should not worry too much about the inflation rate. 6%, and it's good enough. 3% on average. But specifically, people's concerning about the CPI food, and that's something we need to tackle. But having said that, I want to address different issues. That is, in the long run, deflation is not an issue. A huge amount of unemployment is probably not an issue either. But with the 6% or lower than 6% growth rate is an issue. And also, what about income distribution disparity? And I think that's an issue which was seldom mentioned by officials.
Income disparity has a lot to do with income redistribution. And also has a lot to do with whether we're going to have some development of the social security program to cover the whole nation, whether they are migrant workers or the middle class families. Now, having said this, what do you think of the driving force that may sustain the growth?
Well, I think as we've been discussing, there's so much happening, but the real challenge is to move to more consumer-driven growth, to get out of overcapacity industries, and the big task there is to go through the reforms. I mean, that's the simple answer. That involves lots of things. That involves opening up markets. It involves deregulation. It involves, at the same time, better oversight in some areas. It's a lot of tasks to be brought together, but that's the sort of range of obligations that are incumbent upon the authorities if they really want to lead to sustainable growth for the economy.
And since the release of the policy speech by Premier Li Keqiang at the opening ceremony of the NPC a few weeks ago, people are clearly aware of the policy of a fiscal deficit along with the tax reduction for enterprises. Do you think this is going to work?
Well, on the tax reduction, they're going to change the tax system from the existing to the value-added tax system. That being faced with a lot of resistance, because the official claim is that we're not going to raise tax. But in actuality, when you calculate the tax faced by many firms, they're saying, wow, you're actually implicitly raising the tax. So the implementing of value-added tax system is something that the system, or the officials, they have to face, and it's not going to go away within the next 6 months or even a year. We all know the value-added tax system is going to be implemented with rather long period of time, 3 to 5 years, until it's stabilized. So that is in couple with the debt issue that you're saying now. The central government debt, I don't think it is a big problem, but the local government, as well as the SOE owned by the local government, God knows what's the debt were there.
IMF also wants the Chinese government of a huge amount of debt. And hopefully what the Chinese authorities have been doing is to turn the debt into stakes and
equity.
Equity.
Yes.
You got it right. Equity in the stock market. Do you think this approach will work?
A lot of people talk about the debt to equity. That is one approach. There's also debt to bonds, meaning you're taking the debt that's out there and syndicating it. And I'm actually a bigger fan of that program because I think it has better potential and it more directly relates to things. But put it this way, somehow finding ways to systematize the debt is the right move forward. So yes, in principle, I'm for that. I think what's tricky here, though, is valuation. We've already seen issues with bond price spreads at the local governments that don't make sense. They're below sovereign sometimes, the rates that are offered. So anyway, it doesn't mean it's not working, but it does mean that there are lots of details to work out as you go forward with this.
I'm really glad that you mentioned this point, because back in the year 1998, 99, 2000, when we see Zhurongji have a big, huge debt and issues there, and they is trying to the banking sector.
Right.
So all this asset management
all of
company.
the four major state-owned commercial
Exactly.
banks got listed in the H stock market in Hong Kong.
They also got listed in the U.S. stock
with some
market.
projection of capital up to 40 billion.
I know. So
RMB
having
invest.
that kind of experience, I was desperate back in the 1999, saying that there's no way that the Chinese banking sector is going to come back. But hey, 5 years down the road, with all the bad debt or the non-performing assets gone, and with the asset management is running vibrantly.
Sure.
So I see the debt transforming into, say, equity. That's a new experiment for Chinese officials as well as the financial market, and then the microeconomically pricing is what Rob just said.
Right.
And that's a challenge. We are not sure the government will be necessarily successful, but let's just put our effort on it.
Well, I'm not sure if similarly overseas, for example, Sri Lanka government owes China up to $80 billion of debt, and they also want to do the same, turning the debt into equity. But some observers say, well, this is a way to evade paying back the tax. It's kind of a very dodgy thing.
Yeah.
Now, despite the note of a cautious optimism from Madame Lagarde, chairman of IMF, this organization predicts that the low profitability of the Chinese economy means automatically the risk of default. What do you think of the Hong Kong factor?
Lagarde is
A politician.
You said
More of
that.
a politician than an economist.
Politician who is a banker. and a
Lagarde
lawyer.
is certainly a very good, experienced, seasoned politician. She knows what she means, and I think the Europeans
Like
are much
Juan
more.
Samaranch, on all occasions he would say, this Olympic game in your country would be the unprecedented huge success, without exceptions. In all cases, he would say, a huge success. So that's what...
Well, Americans are tend
else
to
can you
be
say?
more blunt in saying these things, but the
We like to
Europeans,
say frank. Yeah, indeed.
Europeans are much more sophisticated, and in some sense, in some ways, they've been more friendly to Chinese government. And I think they are willing to offer help, but they also would like to get help from China.
I've been talking to the chief negotiator of the EU about the banking industry, and that guy said, it seems the US would always tend to confrontational approach by punishing or rolling out punitive measures, but the EU tends to dialogue, a constructive dialogue. Having said this, yes, Robert, what do you think of the risk of default?
I think it's growing, actually. I mean, if you look at the debt level compared to GDP, there's a range of estimates, anywhere from about 240, 250% to 300% of GDP for total debts in China. It's true the economy keeps growing and you have growth sectors, and that's good, and that means some companies are obviously profitable. But the problem becomes more like we were talking about earlier with the local governments, the local government-owned companies, the property and so forth. That could have a big knock-on effect. And even if we assume the private companies are doing pretty well, which they all aren't, but let's say enough of them are, it's those local governments and that debt burden that could become very crushing. And then that could have a huge impact for the overall economy.
Observers, particularly those in the overseas market, have been wowed by the surge in housing prices in first-tier cities such as Shanghai and Shenzhen.
Yeah.
And do you think the easing of property policies have helped to stimulate the growth in the home prices?
Until further evidence
this is
show me
sustainable?
there is indeed a recovery in the real estate market. I mean, third and fourth tier cities, their market is doomed. Housing market in particular. So I would say it's probably a temporary but a speculative movement of capital, some of the domestic but even overseas capitals into these cities, especially Shenzhen. I know, well, Shenzhen is a particular case I have studied. Actually, Shenzhen is very vibrant, has a lot of entrepreneurial spirits which is invested in there. So I'm not surprised, because if you want to create your own company and you fund your innovations, you go to Shenzhen. You don't stay in Beijing or Shanghai.
Are you optimistic, Robert, about the housing prices in the first-tier cities, or are we going to see more bubbles?
Well, I have a different take on housing prices. I think they're fundamentally overpriced, but not in the classic sense. I think that you have very high housing prices in China because you have lack of asset diversification. That's what China really needs. So what happens recently in Shenzhen and Shanghai, I know that's received a lot of attention. People pointed that as a recovery. I think looking longer term, to your point about sustainability, China just needs to fundamentally get out of having such high housing prices in order to sustain other asset classes. That's what needs to be developed. Housing should go down. It should go down in other asset classes, increase in value, and provide attractive investment opportunities. That's going to be better for China long term.
Towards the end of this very lively discussion, Deming and Robert, how do you foresee a solution to the local debts? I mean, with some of the authorities in second, fourth-tier cities even planning to make investment in subway systems, and that's way, way expensive. I wonder what would be the financing vehicles there.
I'm a macroeconomist.
At the same time, they have been required to construct the football pitches. You know, the recent release
Well, you're
of
going to become a football superpower, right?
Yeah, we want to be a football superpower by the year 2050.
For Chinese economy, I would say this. Given that a lot of problems, but any systematic risks, whether it's going to incur in the next 5 to 10 years, I don't believe so. That's simply put, that the government, either central or the local government, they are in the helms and they can control it, the banking system and so on and so forth. But whether that kind of raise or accumulate more bubbles, I'm not sure. So 10 years down the road, by the year 2025, and we are expecting the Chinese GDP is going to be as big as the United States. And then if the financial system is as primitive as what we're seeing now, that will be a huge problem.
Thank you very much. You seem to be pretty optimistic about averting the risks of a hard landing of the Chinese economy, despite the low forecast for the GDP, which was put at 6.7, lower than 6.9 by the end of last year. I'll see you next time. Until then, goodbye.